Good evening and welcome to the Australian Stock Market Show. Last week in Melbourne, city streets were overtaken by wildlife. A deer was seen frolicking nearby a local pub in Fitzroy. Now, you don't see that every day. Maybe he was trying to solicit a buck or two. And trotting right along, we do have a great show lined up for you tonight. As always, we plan to shake things up a bit as we bring you our upfront, no BS approach to all things stock market. In tonight's show, we're going to be talking about all sorts of stocks. We've got ANZ, Credit Corp, Z1P, IAG, CPU, Origin, Coles and more. Our main topic tonight is finding the next Gamestop or AMC stock using short-term trading strategies. Hello, I'm your host Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. How are you?
Good. I reckon the deer was lost. It probably should have been going to Deer Park Shopping Centre to find a bargain or two.
You think so?
Yeah, that's where do you put deers? In the deer park?
I don't know. I thought he might have been stopping off to just check out the local talent, but no, I don't know. I think he was running up the street.
He was. Something you don't see, is it? Just
no, I know. It's quite funny, isn't it?
Are you excited about tonight?
I am.
Yeah?
I am rather excited because we're talking about something that I'm really interested in, and I challenged you on it.
I know. We had a big argument about this one.
We did, didn't we?
Do it. No, I don't. No, just do it. Anyway.
Yeah, it was quite fun. You should have been there.
Cool. If tonight is your first time watching the show, then may I say a really big welcome to you. We really appreciate you taking the time to be with us tonight. And I'm also sure that you will gain some valuable insights and indeed some aha moments that we will share with you that will result in you profiting more if you choose to follow them.
Now, Dale, each week we receive great emails, and as usual we have had to edit a few of them down to focus on the questions asked. And as always, we give preference to those who support our channel and subscribe. So take a moment to click on that subscribe button now to show your appreciation and support for the team that is bringing you tonight's show. Moving on. It is the second Tuesday in the month, and this means we look at the sectors in the Australian market. Now let's get a look at the charts, shall we? You like talking about the sectors, don't you?
On your screen right now is, what do we got? We've got a sector chart. We haven't got the watch list, so you weren't watching, Janine. You needed to be on the right watch list for us so that we're ready.
We had the utilities sector there, which is one of my favourites to talk about tonight.
I know, are we going to talk about that tonight?
I got so excited about it that I actually put it up there for everybody.
I think I should just say, oh dear, you made a faux pas.
What can the matter be?
Okay.
Looking there at the sector indices there, we've got the leaderboard for you. Now, this is the week, so a week doesn't mean a lot in the stock market, really, so we have to have a look at the month. Energy up 10.53%, which is nice, but this is a bit of a turnaround we've seen in the last week for the energy sector.
Yeah, well, interesting energy, because we picked that as being one of the best performers this year in the last part of last year and the early part of this year. In January, it took off like a rocket. Then February, March, April, May, and it went down.
Yeah, so we've been wrong there. We've got to admit that.
And it's like, how did that happen? And then last week we had Santos and we had Oil Search and I can't think, there's a whole heap of them all went up.
Yeah.
Really strongly last week.
Yep, copycat with the US, I think, there.
Yeah, it must have been.
Now we've got the utility sector just following closely behind, so that's 7.3%. I'm going to bring a chart of that one up tonight. Information technology up 4%, or 4.12. Consumer staples 3.47. Industrials 3.46. Now the market as a whole is up 1.83, which is quite a solid result for the market for the month. And the healthcare sector, 1.2%. Good to see healthcare coming back again.
Yes.
Which is great. And CSL's a big part of that, obviously, in pushing it higher. Financials up 1%, which is a solid result for the financial sector, given how strong it's been this year. Communication services up 0.8, materials 0.43, and consumer discretionary just flat, really, down slightly.
Now, this is only roughly a week and a day, or 2 days. So last week and yesterday and today on this sort of stuff. Are we going to have a look at the yearly?
Yes, let's please do.
Okay, so I'm going to look at it.
So you're driving this vehicle at the moment, eh?
Only just at the moment.
That's scary.
Yeah, I know. I got my learner's permit yesterday.
Okay. All right, now we're looking at the yearly figures. Okay, we can see financials up 21%. Nice result there. Consumer discretionary up 14%. And then communication services following behind at 13%. All ordinaries index up 10%.
Yep.
And then we've got materials following closely behind. So the market's more or less in line with what the materials sector's done in the year. Energy's up 6.18, as you were saying before, it was down a bit. Healthcare up 5%, industrials 4.8, Consumer staples up 2.5%. Now, utilities are actually down 4% so far for the year, but we saw earlier for the month they've made a bit of a comeback. Information technology is actually down nearly, 9%?
I know. So it's just to make it, don't get too excited about what happens in a week. That's really what we're saying.
That is exactly what we're saying. So now let's go and have a look at the spaghetti charts. That's what you can see on the screen there. What this is showing you is that more recently there are a number of sectors that have ticked up. So we've seen that on the, this is for the month. So we can see it more, I guess it just stands out, and that's the reason for me showing this chart.
Yeah, so you're saying this sort of stuff like here.
Yeah, because not everybody wants to look at percentages. Some people like to look at the line.
So this is energy through here, and you
chart.
can see how it was floating downwards before that, and energy just took off
Kicked
there.
up. Same with utilities, kicking up at about the same time. Now, information technologies tried to kick up a little bit as well.
I can't see yet. Is that it?
Yeah, so it was down a lot more, recently, but we have seen it try to push back up. But there are a number of stocks, even industrials has been moving up nicely, and consumer staples moving up nicely. Some of the other ones are just rolling over a little bit at the moment. So then we go and look at the individual sectors. We can see what we were discussing earlier about the healthcare sector. You can see down there this week's bar.
This is energy.
Energy sector. This week's bar, you can see there on the chart for last week,
Massive,
is up really strongly. So if we just have a quick look at that, there off the bottom of the bar, the range for the week was 10.5, that you can see. But it really hasn't got past all of this sideways move that we've seen over the past year that's been holding it back. But, another week or so up would really look good for the energy sector, I think. So financials has been trading so nicely of late, kept ticking higher and higher, but it's getting to some levels that are really quite important. So I think the financial sector needs to have a bit of a slowdown for at least a couple of weeks, which would be really important in just keeping that medium-term momentum going over time. And then we've got healthcare sector. Now, the healthcare sector, CSL particularly, has been driving this up strongly. We see further upside in this sector over the coming months. So looking good on the healthcare side of things as well.
Yeah, okay. So what do you think is going to drive the market into the second half?
Look, I think if you just stick with the main sectors that we were just discussing, like the big sectors, the materials, but be really selective about that, because there could be some risk on the downside there. That healthcare is going to be a stale. Look, there's been a lot of healthcare stocks that have been trading down recently and are just trying to make a comeback. So, we're keeping a good eye on those for client accounts at the moment. And then the financial sector, we're really waiting now to see that just come off the boil and then move up again in the second half. So that's typically what can happen in a year. And then, of course, we've got other sectors like consumer discretionary and staples. It's always good to have some exposure in those when the opportunity's right.
Okay, fantastic.
All right, that's all we have from us about the Australian stock market. And now it's time to get into our first email for the night.
Now, our first email tonight is from Jack, who says, "Hi Janine and Dale, I'm interested in your thoughts on Telga Group. Since its high around early December 2020, it has found support and appears to be moving in a more sustainable long-term uptrend." Thanks so much, Jack. So let's go and have a look at, what was the name of the stock again? Telga.
Telga Resources.
Yeah.
Now, Telga Resources, you can see there on the screen. I'll just hide that for a minute. We can see the monthly chart there. It's been quite volatile through its history, and it has been trading on the market now for a good 10 years. So it's nice to have a bit of history on a stock when you're looking at it. But we can see that there's been nothing like what it's done recently.
No.
So it's moved into a whole different phase, I'd say now, and that could be great for the share over the medium to longer term. But looking at it in the short term, we can see that it's pushing down, and that bar this week is not a great sign for the stock.
No.
Because it's just getting to this low here. I believe it may have taken it out. Can you see that?
That's $1.41.
And that one?
And that one's $1.42, so within 1 cent of it.
Yeah, so taking out that low would not be great for this share and could mean that it's more likely to continue down below this March 21 low.
Well, Jack said it found support since that high back in 2020. So
he's talking about this level here. So, it did pull back really nice and strongly, which means that it is a good setup for future rises, but now the stock really needs to trade back above this high in June before we're likely to know.
Well, this could be just a counter trend move in the move going down.
It could be. This whole rise up here from this low could be a counter move, is what Dale's saying, before another move down. But you don't want to, just assume that that's the case, because we'd like to see it push below this recent low, as you mentioned before, really strongly before we can conclude that.
Yeah, I mean, to me, it's looking at it, I don't necessarily think it's going up in a long-term uptrend at the moment. That's why we talk about confirmation rather than speculation, because now it's not in an uptrend, and we need to assume it's going to continue to go down because it has been going down since December. So at the moment, we need to wait for that confirmation, Jack. It's more really about, is it going to go up? We need to get past that previous peak.
Yep.
But if it falls below that low, it's going to go down. So that's it for Telga Group.
Okay, we have an email from Carlos. Hi Janine, Dale and team. Thanks for the awesome production value and effort you guys put into each show every week. I emailed you a few weeks ago about ANZ. Lo and behold, the stock has come down to test support at 26.65. Thanks for helping me exercise some patience. I'm after your updated view on the stock, and I actually now own the stock with a purchase price of 27.52. Do you think there's more potential downside here before we see some upside? Regards, Carlos. Now, great stock to own, ANZ. However, and he's right, look, the stock did come back to 26.65. We did expect some short-term downside with the potential to go higher, but I'm still not convinced just yet that it's going higher until it takes out that
Can I say
high.
something, again, without being rude to Carlos? He's asking the question way too late.
Right.
Because why would he buy into the stock at 27.52, which is what he just said, after we...
26.
65,
was it, or not?
No, his entry is 27.52, so he's waited for it to hit $26 odd and he's bought into it. And then he's asking us if it's got further downside.
Well, he didn't say exactly when he bought it.
Well, yeah, that's true. He didn't.
Okay,
Maybe
so
he
you're
bought it
making a
before we said it's
judgment
further
there.
downside. Well, I apologise to Carlos if
Look, when
if
a
he bought
stock's
it earlier.
running, in fairness to Carlos, when a stock's running, you've always said that you buy if a stock's trending, if it's going up. If there are some rules that have been met and it's traded up high, you don't know, he may have bought the stock on some rules that he had. So, look, I would actually like to give you the benefit of the doubt in this case, and we beg to differ. The voice in the background.
Well, I don't know. It's like he said, I actually now own the stock. So that implies to me he's bought it since the last one that we answered it. So I don't know.
Okay, look, I mean...
You can tell us, Carlos. You can send us an email.
It's as simple as this. If ANZ trades above that recent high of 29, 55, it's rising. It's as simple as that. If it actually starts to pull back and we see it take out a level around, around 27.50, the risk increases that it's going to take out this low. And I'd actually prefer to see ANZ pull back for a little while so that we get a more decent rise following that.
But she's not telling you to sell, Carlos. She's definitely not telling you to sell.
You have your own rules.
Yeah, cool. All right, well, let's move on to the next question, which is from Chris, who says, hi again, Dale and Janine. I bought into CCP last year at $16.79 based on nothing more than a solid track record. Solid track record and their primary business objectives. Whilst I'm currently enjoying a healthy 75% profit, I am trying to better understand whether this stock is a long-term play, 5 to 10 years, or a pandemic stock that will settle and decline as global markets recover. Any thoughts? Insights would be appreciated. Love your work, Chris. Interesting take on how he's bought the stock.
Why do you say that?
Well, he's obviously bought it because of COVID, because it dropped, and obviously he was looking at debt and debt levels increasing and everything, and obviously this is what Credit Corp is in, this sort of area, and it has worked. It was a good assumption that he got into, and he's won. He's up 75%.
Depending on where he actually bought, it would have been a bit of a gamble at the time.
Oh, yeah, it was high risk.
Bottom.
It was a real gamble because it wasn't based on solid research. And that's sort of what he says in his email, really. It's basically, he sort of had a bet that this area would work.
Yep.
And it was sort of like, airlines,
Yeah, so now because he's in the stock and doesn't know how to get out of it, do you think?
Yeah, and that's the point. He's not sure whether it's a longer term play. That's what he's saying, his 5-year play. Is it a longer term play or is it just a pandemic type rise? And this stock will go back to its normal stuff anyway. It will, because it's a good stock. But is it a stock that's just rising on a pandemic now?
I think the question is more around, are you trading the stock or are you a long-term buy and holder? Really,
well, that's a good question.
It all comes back to you and your portfolio strategy, because I could look at this stock and say this is a great trading stock. There's plenty of reasons why you could have sold it recently. And then you might just wait to get back in when it's lower risk opportunity to do it. But if you were a longer term, just looking at the monthly chart, then you wouldn't necessarily be out of it yet.
Yeah. Yeah.
It's that simple.
Okay, so we've got portfolio
So I
confusion.
think he's got to
Is that what you're saying?
decide what camp you're in, put a foot in one way or the other, really, is how it goes.
Okay, all right. Well, that's it for Credit Call.
Now we have a question from Dino. Hi, Janine and Dale. Leading stockbrokers forecast Z1P stock price to be between $6.50 and $12.50 currently. It is $7.11. My question to you is, why is there such a disparity between the forecast prices? Everyone has access to the same company data as each other. They all know how Z1P is going fundamentally and the plans for the near future, yet they can't seem to agree from that data, roughly the same forecasted price. My gut feeling is that some sort of market manipulation is at play. Are the low forecasting brokers shorting the stock or trying to get the market to do so? I could be reading more into this than there is otherwise, just normal market projections, but something doesn't seem right. I don't hold the stock. Your thoughts, please, Dino. Great question. I like this one.
I love that question.
Yeah. Look, I mean, that's a funny one, isn't it? Because with the brokers, they have different opinions for a start. Different biases can impact on what they see from the fundamental data. Even if the company states where their forecasts may be going, depending on the track record and a number of other things that the analysts have seen, these are fundamental analysts I'm talking about, that may rank against the stock and therefore change their forecast. There could be some analysts in there that have technical analysis that they employ in their analysis as well, and that could change the result from, say, a fundamentalist who was looking at the stock. So, you know, that's why you can have such a huge variation, but it's not just that, it's the volatility of the stock as well. And Dale and I always are amused when we go through the reporting season and we see what the results are in terms of how much the analysts got it right. You know, what were they you know, which is exactly what this guy is talking about. And how consistent are they in their findings? And it does vary a lot.
Well, I know the research in the US that I read, I think it was last year, there was a lot of research. Pretty much every couple of years you get the research on analyst predictions, and they generally say an analyst or a stockbroker is good if you can get it right 50% of the time, and I reckon anybody can flip a coin and get 50-50. You don't need to have your brain turned on to get that one. So where are they adding value? And that's the point is, if they're good at what they do, they'll get it right more often.
Well, I'd say it wouldn't be easy to pick, even for a technical analyst at times, this can be more challenging to pick where the stock's likely to trade to just because of the volatility of this one. So just to be fair to them, but that's a huge range. And when I saw his question, I laughed because, you know, take your pick. Where are you going to assume the stock's going to trade to from now? But we won't really know what the stock's likely to do until it actually confirms that it's bottomed out. So at the moment, it's still trying to pad out that low, and until we see it rise above this high here, we don't really know what the potential upside is, because it has a potential to go back up to at least here and possibly even to the 12.10 that they're suggesting, but it also could take out this low in the short term. So the analyst who suggested 650 may be closer to the mark. And,
maybe closer to the mark.
You know, direction's not clear.
But it's also why we use charts. It's not really whether it sits at $6.50 or $12.
Who cares what they rank the fundamentals at, because it's what the market's willing to pay, and the chart actually shows what the market's willing to pay. Yeah,
get in it if it gives you a buy signal and stay with it until it tells you to sell it. Pretty much that's about it. But great question. I really did love it. The next question we got is from somebody called Rhoda. I think Rhoda is how you say that. He says, hi Dale and Janine, I just started investing 2 months ago and I'm very interested in Pro Medicus, but the high PE is holding me back. Would you buy a stock with a high PE? Thank you very much in advance. I really appreciate your show. Sincerely, Rhoda.
Now, I can see the attraction, Rhoda, in this type of share, just looking at the chart, because to me that's really sexy, that chart, don't you think?
I've never called a chart sexy, but I'll go with that. I'll just go with it. I was waiting for your
honest opinion, but, you know, look, I mean, the fact that it's risen so strongly and it does trend really nicely, we can see here a really nice trend up to that high and another good trend up to this more recent peak here in, it's around February 2021 before it moves sideways. Now, it's just broken out of that high. The challenge for stocks when they get to these highs is that they can break out and then come back again. So we've seen the stock break through this high, came back, testing that high again. Now, it's more than likely that the stock is going to continue to rise over time, but it's a question of how long, really.
Okay, two questions. Would you buy a stock with a high PE?
Yeah, at times, sure. If the technicals support doing so, because sometimes the fundamentals can lag what's actually going on. So it may be that the stock is worth much more than what it's currently trading at right now.
I've seen a lot of stocks with high Ps that just brilliant trades. So second question before we move on, is this the kind of stock you would think you would have a new person into the market buying?
No.
Okay, that's
just because of the volatility of it. You're better off to stick to the safer, bigger blue chip shares, more liquid stocks, just,
a lot
simply,
a lot easier.
because you've got to have a good strategy to get out of this, because you could make some nice money on it, but then it could just turn around really quickly and test those prior levels I was talking about.
Okay, there you have it, Rhoda.
All right, moving on, we have a question from Max. Hello, Dale and Janine. If I hold a portfolio of ASX top 20 stocks, what's your opinion of selling call options against them for generating additional cash flow to boost portfolio returns? Is it a good strategy? Kind regards, Max. There you go.
Super question, isn't it? I love it. The answer is absolutely yes, Max. It is a great idea. If you've got good blue chip top 20 odds companies, the ones that are more volatile, like your BHPs and your Rios, those sorts of ones will get you more return in terms of call option, writing your call options in terms of the premiums you get, where something that's less volatile, like a Telstra, will get you less return. So it's having a little bit of a balance on your portfolio, but knowing where the stock's going to. So this is where we have a lot of the people that we mentor and teach. We show them how to be more active investors of buying and selling the stock and adjusting their portfolio and writing options on top of those. So, because you don't want to be, you want to know where you're going to write the option and what price you're going to write it at for your strike price, so that you do get the most amount of bang for your buck, so to speak. And it's balancing that portfolio now. Good brokers will help you write your options and where to set them, but it's also knowing the underlying stock as well, and not just buying and holding 10 stocks or 20 stocks and just writing on all of them. It's about managing the portfolio as well. Did you want to add to that at all?
No, I think you've done well.
Oh, thank you.
I was going to say brilliant.
One day I'll let you know.
All right then. Is that all?
I'm fine. You've just shattered my ego.
It's time we get into tonight's topic, which is finding the next Gamestop or AMC stock using short-term trading strategies. You may remember that in January this year, headlines on CNBC and other media outlets mentioned US stock Gamestop had a once-in-a-decade spike in its price. Now, Gamestop is actually a chain video shop in the US, and its price rose over 2,000% in a very short time as retail investors created hysteria about the stock, and this hysteria was driven in social media and by posts on chat forums. What ensued was retail investors in the thousands following blindly into the stock. Now, the ABC here in Australia reported the corporate titans who were shorting the stock called it systemically wrong. Now, the person who fueled the interests on one of the chat forums reportedly initially invested $50,000, upped it to $700,000 and turned this into $47 million. Since January, there has been a lot written about what happened, why it happened, and indeed how it happened. We've also seen investors asking how they can find these stocks before they rise.
Now, in the past week, we've seen the same thing happening with AMC Entertainment, also listed in the US. Now, AMC is currently up around 300% from the price the stock was trading at mid-May. Now, many looking at this sort of investing think, hey, what a great way to make money quickly. But the question is, do most participating make money, or are they getting caught out with only those entering early on becoming the big winners? Now, would you like to know how you can find the next GameStop or AMC stock before the big rise occurs, and more importantly, ensure you get out of the stock with a profit? Well, that's exactly what we're going to show you here tonight.
Firstly, we've always said following posts on chat forums is not a wise strategy and is not only hit and miss, but very high risk and akin to gambling. You all hear about the success stories, and it wasn't until a few weeks later we started to hear about those who lost a lot of money, people using credit cards to get in. In our experience in observing these situations, we found more people lose money this way than win. So despite the stories of instant riches, the majority struggle. The great thing about understanding how to trade the stock market properly is that you know how it works, and you can see what these people are doing before the biggest rises occur, so you can take advantage of it early. Now, I'm sure you would like to know how to gain an edge and see great trades forming that can make hundreds of % gains, and this is what we're going to show you.
Now, the point Janine is making that you do not need to gamble to have great trades. Just have the knowledge and experience. Now, first up, we are going to show you in detail what occurred with both Gamestop and AMC Entertainment prior to the stellar rises in their share price. Now, what followed and what may occur from here.
Then we're going to discuss the key points to look for so that you can find stocks that have the potential to generate large gains in the short term. We will also share some information on a number of short-term trading strategies that will enable you to manage your risk when volatility is high so you can take more profits and avoid being caught out. Now, we've wanted to share with you how smaller stocks on our market move, not because we believe that you ought to trade them. It's actually that we know some of you are actually going to try to make money on volatile stocks with lower levels of liquidity than you perhaps should be trading, as some of you actually ask us to chat about them each week. But you can find these types of setups repeating on big stocks with returns occurring over varying timeframes. Now, as the saying goes, to be forearmed is to be forewarned. This is really what it means to be educated in how stocks move and the strategies to use to trade them.
Okay, now we all know how Janine loves the charts, and so she has insisted on showing you some setups that have occurred on Aussie stocks and how these moves will appear more often than you actually might think. Now, the important point raised is that you do not need to look offshore to find great trades that are not once in a decade. They happen more often than the traders or others believe or are led to believe. So let's get into the chart, shall we?
I think we should too.
Okay, so what have you got up? So you got GameStop.
I have GameStop Corp sitting on the chart there. Now, not to be confused with GME, because the code is GME in Australia, which some people did confuse it with at the time.
There was quite a few retail investors in Australia that bought GME in Australia, which is not even the same stock. And if they even did it in the US, they bought the wrong stock.
Yeah, that's amazing, isn't it? Now, look, this is quite incredible to see that GameStop actually rose over 2,000% from this time here in January 2021. So you can see the monthly chart on this side. It looks quite dramatic because there was actually a big decline in the share price prior to that, and that's what a lot of people were saying, that they were telling them that they were wrong on these chat forums. There's no way that the stock could be worth that. But in actual fact, what happened, let's go back in time, we'll see what occurred back here. We can see that when the stock started to rise, it was actually rising quite strongly back in September 2020 here, where I've got that mark there on the chart. And then it just went up somewhere and then fell away. It went sideways for a while and it took a long time. So there were a lot of people already in the stock well before any of this stuff happened with GameStop, okay? Yep. So hanging on to that share, hoping that it was going to take off. And then the first sign that it really started to move up was actually here, the week of 15th of January 2021. So you could have seen that this was happening because this is a big change in the action or the activity on this share. Now, just so that we can see what's going on, it's a bit hard because that bar on the chart is so large. If I can get rid of that, you'll see it more clearly. Can you see how that bar this week here, I'm just pointing to it, that 15th of January has just taken off above all of those prior highs and just changed the whole dynamics of the stock. So you don't, and look at the volume. Compared to previous volume. Now, previous volume was showing something like, was it 33 million units?
That's 33 mil, yes.
Yep, and the week that it actually took off, you can see there on the right-hand side, so it's 10 times. So that was already telling you that this stock was moving and it had traded through a really significant level. And we see this on stocks so many times where stocks break out of these moves.
There was a technical buy there, wasn't there?
It was a technical buy, all right? And look, then the stock took off over the following weeks and made this stellar rise of 2,000%.
Can I ask you a question while we're talking?
Go for it.
Okay, when you're looking at this, obviously this is the bar with the biggest amount of move, yeah? That's where the high happened at $483 on that week.
Yes.
Where everybody, man, woman, dog and child was hearing about it all over the media.
That was the point at which people were getting in that shouldn't have been getting in.
Yeah. It was up, you're talking about 559 million shares traded on that, which is what we're seeing. So the most amount of volume was happening here.
Yep.
But if you look at the opening price that week, that's $96 and it closed there at 65. So it's gapped up nearly 50% in price.
Yep.
And it's already gone up from the open of that prior bar from $19 and started up here at $96.
So as a trader, would you go to try to jump into something that had gapped up 50%?
No.
There's no way you would.
Because this is just showing everybody that the retail traders tend to get in last.
Yeah.
And so what's happening here, and what I'm seeing here, what I saw here is the volume's coming here, the people wanting to ramp the stock were in here, then they started putting it. Then
Well, they were in
moved
even
up.
long before that, some of them.
Yeah, some of them were in longer than that. They got in it really, really cheap. Then they started ramping the stock, and then everybody else caught that on the chat forums, went bang.
Yeah.
And then the next week it's all over Red Rover because it's all the way back down to here again. So
Yeah, but you don't need to be part of that roller coaster ride is our point, isn't it?
Correct.
Yeah, so if we look at the next one, which is AMC, that's the more recent one. Similar scenario. The stock was trading down into a low, went sideways for a number of months, and then it didn't just take off when you heard it in the media. It had already taken off
It had
weeks
already
before.
doubled in price.
Yeah, so if we expand this chart, we'll do the same thing and just enlarge this up. You can see there that similar sort of thing. It was just skirting along the bottom there. And then the week it actually showed that something was going on was this week here on the 29th of January 2021. So this is long before it's actually come out in the media as being ramped up. Now, at that point, it got to a high of $20.36. So let's say $20 there. You can see volume is going up as well on the bottom there. I'm just going to bring the chart across this way so we can see a bit better. But then what happened, it actually reversed, similar to what happened on GameStop. Right, so the pattern is really, really similar. It's just traded sideways. Now we're seeing a secondary move out. So this is the point at which more people started to hear about, but the people who are already in the stock were in it on the first move up, and then it got ramped up. Now, a lot of people will be in it. They'll be thinking, oh, GameStop went to 2,000%. I'm going to hold on and wait for this thing.
Correct.
Which is absolutely nuts to do that. So how do you trade these things? Well, that's the real question because there's no exit. No exit on the weekly.
Can I add something to this? Now, if the big end of town do the most amount of trading, don't they?
In volume.
In volume, right? So if they see something that retail traders are doing that's stopping them making money, they're going to learn how to play against that, aren't they, pretty quickly? So therefore, the why GameStop worked so well is because it surprised the big end of town. It surprised the market big time. AMC hasn't surprised it as much because do you know what AMC is? They run theatres in the US, okay? So all their theatres were shut with COVID, so they weren't making much money at all. But guess what they did?
What?
AMC have issued 5 times more shares on their stock than they had 12 months ago. So they had 100 million shares on offer that were freely traded, able to trade this time last year, and now they got 5 times that. So they were selling stock to retail traders.
It sounds like a setup.
And that was bringing capital into the company. So it's when you're trading with an exchange, you're trading on a secondary market because you're not buying off the company, you're not giving money to the company, you're actually giving it to the person's buying your shares off you. So the company doesn't benefit. When you're trading off the primary market, the company's issuing shares and you're paying money to the company. So the company has sold 5 times more shares. So they've made a mozza out of this AMC, and I can guarantee what they're going to be doing is as the price comes back down again, they're going to start buying those shares back and cancelling them out to look after their shareholders.
Well, let's just hope for the sake of the shareholders that are in it that this keeps going, and it could. There's a possibility it could.
But it's overvalued.
Yeah, but at the point of, it's overvalued to what point? GameStop was overvalued when it was up 500%.
Correct, but it's not. There's no fundamental value, so eventually it would go back to its fundamental value.
Yeah, but look, has GameStop gone back to its fundamental value?
Not yet.
No.
Not yet.
So, it depends on what perception of the market is as to whether there's more money to be made there. However, the point now is how do you actually exit this if you are in it? So there's no exit. I'm on the daily chart now.
There's no exit there.
But the thing is, it's about actually trusting that an exit will follow. You have to. You've got no choice at this point.
There was technical entries on this stock on both the weekly chart.
But do you just sell half and get out? Like if you were in this stock and it was up 400%,
I'd sell half.
Yeah, so would I. I would just take it because there's in some of these sorts of stocks there are no rules. Look at what happened before on the daily chart.
Yeah.
The stock made an exit here, but it gapped down. How much did it gap down when it did it?
Yeah.
When it got sold off, it gapped down at least 20-odd%.
Yep.
Now, they may not be able to see that because that is quite small, but it did gap down around 20-odd% there.
Now,
but
look at this.
The point is that these sideways moves that happen everywhere on all sorts of stocks, not just low liquidity type shares. They happen on big stocks all the time. And they can actually help you get a more consistent return out of the market when you're trading to be following these sorts of things, where you see a rise, a bit of a sell-off, and the stock trades sideways and then it takes off again. That can actually be a good point of entry, but you still need to set a stop loss. So, you know, can I just grab that mouse off you again? You don't want to let it go, do you?
No, I don't, because I want to say something that's really important. Because again, where my pointer is, that's the highest volume bar, which was Wednesday, the 2nd of June, last Wednesday.
Right.
And that's exactly the same as the high again. So what's happening is it's what Buffett talks about, buying doom, selling doom, boom. Okay. So if you're an early adopter into this stock, when are you going to sell it out? When everybody wants to jump in.
That's right.
Because you're going to get the best prices.
So look at the volume.
So look at the volume. That's really what I'm going to say.
Yeah, okay.
Okay, you can have it now.
All right, thank you. Now, I mean, we're talking about potentially exiting and selling 50%, but you could wait for a rule on the daily chart as opposed to waiting for the weekly. The alternative is to wait for an exit on the weekly chart where the stock starts losing momentum and it begins to trade down. The earliest sign of it doing that would be to see a move down in any 1 week where it changes colour, basically.
All right, now these are US stocks. I don't want to look at them anymore. Where's the Australian stocks? Let's get into some really cool stuff.
Yep. Now, everybody thinks, oh, look, it only happens in the US, but that's not the case at all. This is Marley Spoon that is actually
happened in the US.
listed on the Australian stock market. Now, it's actually traded off a low. Its low was 18 cents back in December 2019.
Yep.
It actually skirted along the bottom, similar to what we saw. It was trading down, traded along the bottom, and then took off on the first run into April 2020 before another one. Now, this was all around the COVID. You know, people were at home. They were eating from home. These are meals that are delivered to your home. So here in July 2020, the stock just took off. Now, since then, it's really just traded sideways, which is more about the market just catching up with the reality of the company. But it hasn't fallen away, really, just yet. It's still going sideways. Now, if we can just expand that up a bit, see here, the similar sort of thing happened with Gamestop. You see a bit of a move up and down off the bottom. All of a sudden, this week it took off to tell you that something was happening, and then it rose 787%.
So should I just watch volume then? That's it?
Volume is only part of it, right? Because volume is telling you that there's a trigger there. It's just supporting the direction and supporting the reason to trade it. So if there was low volume on that rise, you would be suspect and wondering what was happening on it. But because volume's supporting it, it's an extra, I guess, tick of the boxes. When you're doing a checklist before you trade, you tick off a whole lot of things before you can enter. So that's a nice little one. Then we've got this one, Piedmont Lithium. It's another smaller stock. Again, we saw this decline into the low, a slowdown happen, sideways move, very similar pattern to what we saw on the Marley Spoon example. And I've just clicked the wrong thing. There we go. And you can see there, same thing, high volume that week of September 2020, and off it went. The first rise was probably about 300%. Then it went sideways. And this is what we saw on GameStop as well, this same sort of sideways action. The week of, this week of 8th of January 2021, again, it was showing a strong sign that it was going to take off, and it continued to move up again. So, you know, whether you got out at that point after this move, you may have, depending on the rules that you had set. Because when a stock loses momentum, it comes back for a couple of weeks, rises again, and then pulls back again. Often there are signals in there. You know, there was no exit there according to a trend line. Some of the more basic exits that we teach in our course would have kept you in the trade, and then you would have been rising.
These types of stocks, would you use a volatility-based type of stop? I probably would.
Look, you would, but would you do it for the whole position? I think we came to the conclusion no.
Well, depending on the stock, it really would be. So, and depend on my outlook from my portfolio. But I think if you've got ones that can go up fast, they can go down fast. So,
well, that's true. It depends on your risk appetite as well, doesn't it?
And if you get out and it gives you another signal to get back in again, like this one did,
then you can make money a second time. And that's the point, really, because big stocks do this all the time. So they could do, you know, between 10, 20, 30, 40, 50%. Sometimes you'll find them doing more than that, but wouldn't you rather have a stock that's going to be consistently delivering a return over time than ones where you have to just sort of be in and out and quick? I mean, and you have to be on the ball. You have to have the skills to be, you know, right and more accurate, much more accurate in this sort of trading.
You might have to look at 100 stocks to find one of these.
No, you don't actually.
How many? 200?
I looked at 300.
500? 1,000? Okay,
I just wanted to stir him up. So looking at the stock here called Ioneer, which I think is a really cute name, but
Ioneer?
Ioneer. You can see here that the stock traded sideways again. So we had that initial rise. Now, You could have even bought here on the 3rd of June 2016 when it took off above, but it was so illiquid at the time. It was only that week where liquidity changed on the 3rd of June 2016, and you would have had a good trade up there. But the real benefit came when the stock pulled back, as we saw on previous examples, traded sideways again, and then we get a push up again, a 560% rise to the high, which is quite nice. And you might have been out before that, but you could have traded it again because similar sorts of moves happened and happen all the time on stocks. So again, on the right-hand side, just to show you that it's not a one-off, again, the stock bottomed out, slowed down, took off again, and then there was a stellar rise of 222% roughly from that week where it closed here on the 2nd of October 2020. So some really good examples. Can I do another one?
Well, I'm not the one going to yell in your ear.
Yeah, this one's exciting, okay. This is Chalice Mining and came up in a discussion that we had about some of the mining stocks in previous shows. And now we can see here that as the stock was trading sideways back here, it actually fell down into a low, took off that week. Now, 27th of March 2020, the volume was high again, price was up, looking good. But you may not have, look, would you have bought it on a gap up like that? That would have been a huge gap up. So in our case, we may not have bought it there if we were looking at it. And then it went up for 3 weeks, continued to rise. So that's a nice rise. But the real part of the rise that you wanted to be in on was after that sideways move that kicked in.
And there's lots of technical reasons.
Again, yeah, same thing. Nice big rise here, 21 August 2020. Off it went. And we can see that there was possibility to make a 500% return. Now, some of these early movers who were in here, early on that were in the know, made a 2,000% return. So, it does happen more often than you think.
But it's still hit and miss. It's like playing, just as we're wrapping up here, it's like when you're playing darts, do you want to keep trying to hit the bullseye all the time? How are you going to hit that?
Because these are less frequent, for example, than finding those other trades that happen all the time with similar patterns.
That's what I'm saying, is it's better to go one that you're going to hit more often than not than trying to go for the bullseye every time. Because if you go for the bullseye every time in a darts match, you're going to get beaten by the person that's going for the 3 times 20. It's a bigger area they're hitting. So they're going to hit it more times than you, and they'll beat you at playing darts. And
I think I'd be just happy if I hit the board.
Yeah, and it's the same with the roulette table. You can go red or black and get a 50-50 chance, or you can put it on a number and have 1 in 50 chance of getting it. So,
I was just thinking of you at the dartboard, and I was thinking, Dale, you don't want to stand next to that dartboard.
Not with you playing anyway. I think you'd aim at me. Anyway, I think it's about time we get back into some more emails today.
Now we have an email from Daniel. Hi Dale and Janine and team. I've continued to watch your YouTube live streams, which I have really enjoyed, and since then I've purchased both of Dale's books, Creating a Trading Plan, Trading Log, etc., as outlined in his books. I've just recently purchased IAG at 523 as I believe it has traded above a downward trend line. Please see attached my trend line and trading plan application for IAG. Would love your opinion on my very basic analysis as well as your outlook for the stock based on the charts. Thanks, Daniel. Phew, that was a lot.
Well, I had a brief. So I got to apologise to Daniel. I had a brief look at his chart, and I had an even briefer look at his trading plan. But the chart, you almost got the trend line right. You got pretty close to it. So I think I'll give him an A-, not an A+. But I think he did a really good job of it. When I had a quick look at your trading plan, I meant to have a good look at it before I came out here tonight to the studio, so I didn't check your figures and everything, but it looked like you had a good job of it. But I didn't go and check any of your stop losses.
So what is a good trading plan?
No, he took it out of the book because there's a trading plan in the book. So he's just used that and filled it all out.
So you're saying it was pretty much in line with the book?
Absolutely. Right. Without me checking all the prices and stuff like that, he looked like he'd filled it out properly. That's what I'm trying to say. Now I'll shut up and you can answer it.
Okay, so we're talking about this stock I've got on the screen right now. So this Insurance Australia Group. Now it's recently come off a low and looks like it's starting to move up really nicely. So this last week, let's see if I can expand that up. So the stock's traded to a really important level actually around here and confirming it's finding support. We're seeing some higher lows moving up and the stock's actually traded above that prior high last week and is looking good. Short-term resistance exists across these highs here. So there's some potential resistance there at 550. But the next really significant levels all the way up here at around this 640, 630 mark. So I think that looks really good.
I think it looks really good. Just have your stop loss on it. That's all I would say.
Yeah.
What do you reckon?
I think that's good.
Fantastic. Well done, matey. That was a really good question. The next one we have is from Will, who says, "G'day, Dale and Janine. Could I please have your thoughts on Computershare? Last week looked strong after it gapped down on Monday and didn't fall back and close below the resistance. Now," he said, "I'm looking to enter. Cheers, Will."
Right. Okay, so look, Computershare I think is a great stock to have in a portfolio. It's looking nice right now, and potential for this stock is between $18 and around $19. That's reasonable at this time. It could go higher because with Computershare, when it gets into a long-term trend, it can actually go up for many years, looking at the history of it.
Yeah, I mean, it's trending really, really nicely. You know, if you whack a sort of a trend line up underneath it, you can see there's momentum. So it does move away pretty sharply and come back a bit. It's a little bit more volatile.
Now, because it's sort of hit that line a number of times and it's taken off, you'd be expecting it to move higher now, wouldn't you?
Yeah, that's what I'd be expecting. So I'd agree with it. I like it. I like your entry. I think his entry was reasonable. I think he put his entry on it, didn't it? No, he didn't put his entry on this one. Sorry. He should have. It looked strong after it gapped down on the Monday, but I do like it. I do like it.
That's because it reversed last Friday and closed up strongly.
Yeah, because it closed up strongly, which shows there was not a lot of selling pressure on it, which means the market is saying it doesn't want to push it down, which means that's exactly why Janine's saying it looks good for going up.
All right, next is an email from Caleb. "Hi Dale and Janine and team. Would appreciate your opinion on long-term prospects for GMG. I've put in an order to buy above 2007. Fundamentally, it's projected to grow in earnings over the next 2 years. Technically, I believe it has found support around $16.50 and is now heading into clean air above $20. Really grateful for the work you put in each week on the show. Kind regards, Caleb." So
I don't think I need to talk about this.
Very much for that.
He's done well, hasn't he?
Yeah, look, it looks lovely, the fact that it's taken off above that
He's
high.
into it now if he's done his buy rules.
Yeah, it looks nice. So, look, GMG is likely to keep going based on that. Now, if it does come back, it's got a nice low underneath here in May 2021 to predict on the downside, but just make sure you've got a stop loss in place and good luck with that one. It looks nice.
Yeah, I think it does. I don't have any issues with that. I think it's looking good. I just make sure you trail your stop loss underneath it and then take it from there, I think.
Trend line could work well. Just looking at the way that it's trended up from the COVID low, it looks like that would have done well to get somebody out of it prior to the pullback.
Now, given it's gapped, but he's gapped above that previous high, which is what his entry was. So basically his entry is if it traded above that high. Now, he might have had some other rules around that as well.
Yeah, it didn't gap the week it traded above that high, though.
But at the moment, you're seeing it's moved up, but looking at it, it's opened high and traded down. So he may have bought it right up here around the open at 2070.
Yep.
Now, it's not unusual when you see something break through resistance for it to gap up and then come back down towards it and then start to find some support and then move back up again.
Yeah.
So from Caleb, don't be surprised if it does come back a little bit. Don't panic, mate. That's why you have stop losses. Give it some room and let it go, because both of us like the stock at this point in time. So well done, matey. It's good. We like it. Next, we do have an email from a new viewer, Michelle. So welcome, Michelle, to the show. "Dear Janine and Dale, I'm a holder of Imugene for the last 18 months, which is a great Aussie biotech company. I've realised a tidy increase in that time, but am now at a loss as to what to do next. The shares have been heavily traded recently, and I don't know if I should sell or add more to my holdings. Would love to know what you see in the charts and for the future of this company. Many thanks."
Right. Now, looking at it technically,
Holy moly.
I wouldn't be adding. Like, if it was my position, I would not be adding to it right now because it's pulling back. So you never add as the stock's pulling back because you don't know whether it's likely to keep falling. And so that's the risk that you'd be taking, especially with a volatile stock like this that's on the lower liquidity end. I think you've done well. It looks fantastic. There was a nice little setup there way back in March 2021 when it just took off out of that. So that shows a lot of momentum, but it could come back over a number of weeks, and you've got to have rules. And at this stage, there's nothing there on the weekly chart to get her out of that. The only thing that I can see, there is an exit on the daily chart, which has just happened this week. It's not to say that it could rise, but I don't know. I sort of think it's about not being greedy.
Yeah, yeah. I mean, there's no technical exit on the weekly chart, is there really?
No.
And that's why some of these stocks that do take off vertical, like this one here, you really do need to look at whether you set some sort of volatility trailing type of stop loss instead of another type of exit, because I mean it has gone really vertical through here and coming back down again. So we're not going to tell you to sell, but we're definitely not going to tell you to add to that position at this point in time.
That's fine. I'm happy with your response.
Oh, okay, that's cool.
Now we have a question from Wayne. Hello, Dale and Janine and team. Could you please comment on the following statement? JP Morgan's study on 32-year returns in the S&P 500 index found that investing at the top of the market produced better 1, 3 and 5-year average returns compared with investing for the same time period on any random day during that same time period. As it seems like half of the investing equation to me, ? Kind regards, Wayne. Great question.
What are you laughing at?
I just think I almost know what you're going to say, but I'm not going to tell you what I'm thinking. So
it's like, it's how do I beat? Don't take any notice of those sorts of things, mate, because it gets down to, for us to answer that, there's not enough data in terms of, we don't know what the study entailed, so we need detail of the study. But I don't know about you, Janine, but I know we can make up all sorts of figures to make all sorts of things being correct on the marketplace, because it depends on when you invest and when you don't invest and what types of stocks, and is it buy and hold?
Look,
or
what
is
you're
it
talking
trading?
about is people quote things from a certain point in time.
To suit their story.
Their story on the market, and we see that a lot. You know, we'll just, even on the news sometimes, you'll just look at the report, it'll show a chart, and it will start the chart from a low instead of starting it from, say, 3 months earlier where the stock was actually trading at a higher price, so they're making it look really good. Right? It happens all the time. But, you know, I mean, like you said, we'd have to pull the data and the results apart to actually have a better idea on that.
In my mind, all that's a lot of bullshit.
I'd go back to the chart. So that's the thing.
Yeah.
Go back to the chart yourself and have a look at the actual long-term chart and see what the monthly chart is telling you about that, and you can measure it yourself.
That's why we have our own goals for our own portfolios and everything, rather than, you don't need to look at that sort of stuff. But it's also about you deciding what you want to do, because you'll outperform the market anyway. And, you know, we've seen a whole lot of stuff like, what's that old statement we disproved months and months ago? It's about if you're not in the market on the 10 best days the market's moving, your return will substantially be decreased, whereas markets don't crash up, they crash down. So if you're not in the market when it's moving down, you're going to make more money. So you can make anything you like. But good question, matey, and I'm glad you're asking the question. So, but again, just ignore it. It's not really going to help you when you're taking on those sorts of things anyway. But moving on, we do now have an absolutely great question from a gentleman called David, who says, "Hi, Dale and Janine and team. Hope you could please share your thoughts on Origin Energy." Origin has done really well lately. I don't currently hold the stock, but I'm looking at possibly purchasing for the short to medium term if positive price action continues and moves through the $5.20, $5.30 mark. Forecasted EPS on my broker data shows to be increasing close to double over the next 3 years. I was hoping you could also discuss the accuracy of forecasted EPS and how to interpret current EPS being higher than future forecasting. Interesting, isn't it?
Look, first
I know
of
you got
all,
a lot of comments on EPS.
First of all, let's look at the chart and just decide, well, what do we see on the chart? Now, he's talking about this level at 5.20, 5.30 and waiting for it to get above that.
Yep.
And I think that's a wise point.
Smart.
Because in terms of the longer term direction, you can't be sure that the stock's finished falling at this stage. So it's possible that it is finding support from this low, but it made a lower low recently. You can see on the right-hand side in May 2021 compared to this low. And sometimes when you see that happening, especially after it tried to push up through this level and then you get this lower move, that it could indicate further fall. But last week's bar was strong and may indicate that things are changing, and there's a bit of volume supporting it, slightly higher volume there. But at this stage, would you be buying the stock?
No.
No. So, you know, it's up to the individual whether their rules have been satisfied, whether they would buy the stock or not. But I think that point, to answer his first part of his question, that 5.20, 5.30 is fine. As far as EPS or PEs are concerned, I mean, we have a split view on that, don't we?
Oh, yeah, absolutely. Can I show you something on the chart that I just watched?
Yeah, fine.
Because, I mean, obviously, what if this kept going straight through there, would you buy it?
If it keeps, it needs to meet the rules.
If it just kept going straight up, would you buy it?
Not necessarily.
No. Yeah, because we've seen that here. it's gone straight through 520, 530, and then it's come all the way back down again. So it depends on how strong this resistance level is. It really does. And we need to look at what kind of rules and confluence of rules you would have around that point to make sure that it's just not going to hit that level and come back down again.
Yeah.
And that's really what we need to talk about there. But you'll always see issues with EPS and PE ratios.
But EPS, we tend to rely on more than the PE ratios. And so, you know, there's only one equation in there. It's just the earnings per share that we're looking at, whereas the PE is a combination of two things. So I actually prefer just to see whether the earnings are supporting the direction of the share price.
And you want to see earnings growth too, not just stagnant earnings. You want to see earnings growing over the next 1, 2, 3, 4 years too.
Yeah.
So, but if you see declining earnings, then it's unlikely the run's going to be good. You know, it's not going to be sustainable if it's got declining earnings.
It depends on the stock too sometimes, because often the historical earnings could be negative, but it might have turned a corner. It depends on the story of the stock.
I'm talking about future, not historical ones. Yeah. But that's okay, but look at it anyway. But that's it for whatever this stock is.
The next question is from another David. I have just found your YouTube channel and webpage, and as a beginner investor, I'm loving the info you give out. Thank you. I have a question about Hum Group. Looking at some of its announcements this year, do you think it could ever rival Afterpay and Zip? Cheers, David. Well, thank you very much for that question. We've got 2 Davids in a row.
I know.
Hum Group looks interesting, doesn't it?
It does look interesting, but it's not exciting, though, is it?
Not yet. It's in the really early stages, I'd say. But, you know, there's so much resistance for this share at around this price here. And what's that high there? $1.36.
I've got to put my glasses on again. $1.36.
Yeah. So it really has to do a lot to prove that it's going to be able to push through that high yet at this stage. The challenge is when a stock moves up off a low, it could just be trading in a sideways range. And as we said before, because these lows have been lower, or this second low has been lower, it could always continue the trend down. So at this stage, looks interesting, however, hasn't proven itself just yet. Okay,
so we've got getting more volume. So there's more volume coming through in this sort of area, but it's not bullish. It was only, if we look at that, the volume was there supporting this run, but it's dropped right off through here. What does that start to tell you?
Look, I think people should be, you know, aware of the fact that the volume is dropping off, but I would just be watching for spike volume to happen again and see if that's supporting direction. Also, look at the historical volatility of the stock. Just measure each week and how far it typically rises in percentage terms in a week, because you need to understand the personality and how fast it can move.
Okay, he's also asking whether this will rival Afterpay and Z1P. And I think, how do you answer that?
I don't know.
You
really don't.
Really, you can't, because it's just about competition and what they're doing and whether people want to use these guys.
Look, I think if it does get, all I can say for you is that if it does get through this high here on about 135.36, that it has the potential to go all the way back to around about $2. So that's what I'm suggesting.
Well, there you have it from Janine. Ask the Oracle, Janine. Now we have a question from Joe, Dear Dale and Janine. Looking at the past few weeks, Coles appears to have found some support and be heading in a bullish direction. Do you agree that it's no longer a falling knife, please? I do not currently have a position in this stock. Thanks, Joe. Okay, the falling knife's out of the equation at the moment now, because the stock's moving up and it's looking like it's trending better. So, you know, there is some upside there for Coles, I think, in the short term. There may be some resistance at around that $19 mark. But, you know, jury's out at the moment, isn't it, about how far it could go. If it continues up strongly, it could take out that prior high. But it is. It's just running along sort of a nice momentum, isn't it? If you sort of whack through here, it full flow down. It's just dropped down. It's coming back up to it again. But once it gets above this sort of thing, I think it's going to go quite nicely. But it is quite a stable stock. So is it too early to buy this stock, or is it one that you would look at buying sooner? Well, again, it depends on your rules and your time frame, but it is actually moving up nicely. So, you know, if you're going to buy it, and you've got to be looking at the risk on the downside to see whether that fits your own equation, your risk versus your reward. But the upside's there to justify the risk, I think. Volume's reasonably stable. It's not really expanding on this upward move, so it's not too bad. I don't think it's going to be a stellar riser in this short term. But, you know, there you have it on Coles. Okay. Well, okay, that's our thoughts on Coles for Joe. Now, I don't know about you, Phil, Janine, but time has just seriously flown tonight with lots of great questions. So well done to everyone who took the time to send us in an email. And if you are sitting there excited about what you're learning and feel like you want more and you just can't wait for next week's show, well, we actually understand that. And what that means is you need to grab a copy of my first book, How to Beat the Managed Funds by 20%. And you can get that for free. All you need to do is just pay the shipping. Now, there's a link to it at the top of the homepage of our website, wealthwithin.com.au.
Each week we get emails from our viewers asking us about how to get into trading the market. So if you have been thinking about trading and want to learn more or are wondering what you will learn, call our team as they're more than happy to spend some time with you and no obligation at all to help you to understand exactly what trading is and how it might benefit you. All you need to do is call 1300 858 272.
Cool. Well, that's it for tonight's show. We really hope you not only enjoyed what we presented tonight, but really got a lot of value to our answers our answers to your questions. So now it's up to you to help us and hit that subscribe button, or the subscribe button, to say thank you to the team who put in a big effort to bring you the show each and every week.
Can you get that out?
Yeah, I don't know, my mouth's not working tonight.
Also, remember to put this show into your calendar to join us right here on the live Australian Stock Market Show every Tuesday at 7 to 8 p.m. If you'd like to have your question answered on the next show, send an email to info@wealthwithin.com.au. Remember to type Wealth Within Live in the subject line, and also remember your email must be delivered before 3 p.m. on the day of the show.
As always, we thank you for joining us and we hope you have a great week. We look forward to you joining us again next week. But for now, goodbye, good luck and good trading.
Good night, everyone.
I think I'm going to join that deer at the pub.